I'd like to welcome David Garofalo, Chairman and CEO of Gold Royalty Corp. David was named Mining Person of the Year in 2012 by the Northern Miner. He was also Canada's CFO of the Year by Financial Executives International Canada in 2009, Top Gun CFO by Brendan Wood International 2009 and 2010, and he was recognized by IR Magazine for Best Investor Relations by a CEO in 2011. David is kind enough to join us from Vancouver. David's appeared on our show a couple of times already. I think the last time was the spring of 2024, and delighted to have David back again. David, thanks for joining us.
I'm delighted to be here, Alan. Thanks for having me on.
Hi, and I apologize for the voice, just coming off a bit of a cold. But I guess the last time you and I spoke, interesting, gold was 2160, 2150 an ounce back then. Over the past couple of weeks, it peaked out in and around 4,400, just under. And as you know, it's risen dramatically in 2025, the price of gold, that is, almost 50% higher year to date. So I guess, what are your thoughts on the current surge, and why do you think it's happening now?
Yeah, I think there are a number of macroeconomic factors behind it. I'm not a gold bug. I'm actually trained as an economist. That's my background, and became a mining guy about 35 years ago. So I just look at economic fundamentals, and gold is a currency, not really a commodity. I mean, people think of it as a commodity, but the reality is for millennia, it has been a currency, and it's a currency that can't be printed. It doesn't subject itself to the whims or control of any government in the world. It's the most liquid currency in the world. It's the most recognizable currency with intrinsic value has been recognized for many generations. And really, what it's reflecting is the debasement of our paper currencies. And that's really a function of the significant amount of debt that we've seen strapped on globally at the government level, corporate level, personal level. And really, the only way to deal with that debt is to print it away. And that's what governments have been doing with exponential increases in paper money supply, really going back decades, 50 years since we abandoned the gold standard back in the early 1970s, but accelerated since the great financial crisis about 15, 16 years ago.
So it's interesting you call it a currency. And one of the questions I was going to ask you a little later in our interview, I think maybe I'll ask now, because one of the things I struggle with is gold and why people buy gold. You call it a currency, yet not that I know of, but you can't take a bar of gold and walk into a grocery store and buy groceries. Last I checked, you can't, walk into any store and buy any item. So for me, owning gold is difficult to understand. I struggle with that because really, other than jewelry, it doesn't really have much industrial use. So I always come back to the fact that maybe it's a trading vehicle. Maybe people own it as to trade it. When the environment is right, you get in. When the environment is looking a little bit not as good, then you get out. So I guess keeping with your comments about currency, why do people buy gold? Like I just don't understand that because I don't look at it obviously as a currency, because if it was a currency, you could make purchases with it. So what do you mean by gold as a currency?
Well, it's interesting you mention that, because if you walked into your local Loblaws with euros and yen, you wouldn't be able to buy groceries with those either. You'd have to go to the bank and get those exchanged into Canadian dollars. For that matter, I was actually in Morocco for vacation a few weeks ago with my wife, and I had Canadian dollars in my wallet, and I couldn't do anything with those. I couldn't even exchange them into the Moroccan currency. So the reality is, you have to go to the bank to exchange currencies in order to be able to transact. Anyways, it's no different than for gold. Gold, you'll have to go to the local bank and buy your local currency. And the great thing is, gold is the one currency you can take at any corner of the earth, and you will get local currency for it. You couldn't say that for the Canadian dollar, for that matter, or for some of the other more exotic currencies globally. So it's a far better currency than any fiat currency that we have on Earth right now. And the other interesting thing, economic history has demonstrated that each and every fiat currency ever created by man has ultimately failed, because the temptation for governments and central banks to debase that currency is just too irresistible, particularly when you're dealing with the debt levels that we have globally. The temptation to debase the currency, to debase the debt, is just too great. And there is no fiscally responsible way for us to repay the debt that we strapped on. And so that's really what's driving the gold price up. It is an agnostic barometer of the intrinsic value of our fiat currency. No government can control it. No government can print more of it. And so it's just telling us that our fiat currency is seeing a debasement. And in fact, if you look over 50 years from when we abandoned the gold standard back in the early 1970s, the gold price has gone up 150-fold in that period of time. The purchasing power of our own currencies in North America have gone down about 99%. So it's a very linear relationship over that long investment horizon.
Interesting the way you look at it. I guess you have a point. You would have to take your gold and exchange it for whatever the currency is of that country, just like you would dollars, Canadian dollars into, like you said, the currency in Morocco. I guess many Canadians own gold as part of a diversified portfolio, and they use it as a hedge, right? You hedge against the U.S. dollar, hedge against the U.S. economy. Do you think it's an effective hedge? And I ask because we've seen gold move higher, price of gold move higher, and US dollars move higher at the same time. So is it an effective hedge? Or, is seeing both move up at the same time normal, or is that unusual?
Well, it's true. I mean, we actually have seen the gold price appreciated more recently, I would say over the last several years as the US dollar has appreciated. But lately, we've seen the US dollar actually depreciate against other major currencies, and the gold price continues to march up because the reality is the US dollar is a paper currency like the euro, like the yen. And yes, they will trade up and down relative to each other. But in aggregate, when you look at a basket of currencies, they're all depreciating against gold because gold is not increasing in supply. It can't be increased in supply. There's a remarkable elasticity of supply to price because mines are so difficult to build. We're seeing how difficult it is to build major projects here in Canada in terms of getting First Nations consent, government consent, and whatnot. And I know the Carney government's trying to cut through the red tape, but the reality is these are capital intensive exercises with a lot of social intensity around them as well. So we can't really bring on new supply in response to the gold price. So gold really cannot be manipulated, whereas the paper currencies can be and are debased continuously through the printing of increased paper money by central banks globally. So yeah, they trade up and down relative to each other, but the reality is against hard assets that are finite in quantity, these currencies are being debased.
Yeah, no, there's no doubt about that. All the borrowing, the more the US seems to borrow, the more gold seems to be going higher. I've heard a number of clients call, especially lately, gold a safe investment, which is interesting. And I'm not sure what people's definition of the word safe is. The word safe means different things. Do you think that gold is a quote unquote safe investment? And how would you think of gold in relation to other investment classes like stocks or bonds or even crypto? What would your comments be? Like you mentioned, finite. Well, crypto, I know there's only so much crypto in the world. And how would gold compare to crypto and other asset classes?
Yeah, look, I think without comparing one asset class to another, because I'm not a portfolio manager, you are, and you have much more expertise. But I would say most portfolio managers would tell you want to diversify your portfolio, you want to have exposure across multiple asset classes in order to get optimum risk-adjusted rates of return. And I see gold as kind of an important element of a diversified portfolio when you look across the various asset classes that you can buy. I think the difference between crypto and gold is gold does have physical properties. It has been recognized as a currency for 4 millennia. It is an indestructible element out of the Earth's core. It is an important diversification tool for central banks. To date, I have not seen central banks buy crypto in any significant quantity. They still buy physical gold because they're recognizing that owning U.S. Treasuries, for example, does not cover the cost of inflation. The yield on those U.S. Treasuries, the reality is inflation is well above what the headline numbers might indicate. I think we're seeing that in our day-to-day lives. Our purchasing power is declining much more rapidly than the headline inflation numbers are indicating. Gold's reflecting that, right? And central banks are buying it because they are not getting real yields, positive real yields on their treasuries or other sovereign debt that they might own within their central bank reserves.
Would you call gold a safe haven or safe investment? I think that's the term that I'm struggling with for investors. To see gold, I think it just today alone, I saw it at one point down 60, $70 an ounce. I just checked before we started talking. I think it was only down three. The other day it was down 200. So just difficult, as you said, when I talk to investors, they're calling it, maybe we need, well, they'll say, maybe we need some safe investments. And they'll say, what about gold? And I look at that and I cringe a little bit because it's just so volatile. So what would your comments be on the volatility of the price?
Yeah, you're absolutely right. In the short term, there is a lot of volatility around gold, but over the long term, it's actually been the most stable investment you could imagine. Over a 50-year horizon since we've abandoned the gold standard, we've seen a 150-fold increase in the gold price, and that's been entirely reflective of the debasement of the purchasing power of our currency. To put it into very visual terms, a gold bar, which is probably several million dollars in value 50 years ago bought you a nice house. Today, it buys you a nice house. And an ounce of gold 50 years ago would have bought you a nice suit. Today, it buys you a nice suit. It has retained its purchasing power in the most visual terms you can imagine, the most tangible terms you can imagine.
So you're saying, I guess, it keeps up with inflation. It is probably the only thing that keeps up with inflation. So I guess in that respect, it makes sense to own because as we know, you're not going to buy or own a portfolio that has 50% gold in it. You
No.
might own 10% or whatnot. So a hedge against a weakening or chaos in the markets, it doesn't really work because you just don't own enough of it to be able to effectively hedge when other things are going down. Even if your gold is going up, it's probably only a small portion of a portfolio. And so for investors to understand that is what I've been talking to them about. I guess what I wanted to end off with a question with respect to exposure to gold.
Hmm.
For someone, how do you recommend if you were going to buy it? How would you recommend buying it? Would you recommend buying physical gold, like you said, gold bars? Would you recommend ETFs, mining stocks, certificates? What do you find most investors that how they're buying gold and how would you recommend if you have a recommendation? How would you recommend owning gold today?
Well, there's never been more ways to own gold than occurred today, or it occurs today. About 20 years ago, there was an ETF introduced on the New York Stock Exchange that's physically backed by gold. Up to that point, you had to actually line up at the bank and buy physical gold, find a way to store it. So it was rather inconvenient. And now there's a very convenient way to own physical gold through the ETF, as I think it's called the GLD on the New York Stock Exchange. And that's created a lot of physical demand for gold that didn't exist 20 years ago, but also opened it up to pension funds and mutual funds that couldn't own physical commodities, but they can own an exchange traded fund, an ETF. And so that has opened up a much broader array of investors that couldn't participate before. But if you're looking for leverage to the gold price, typically you're looking for gold equities. And the gold equity should offer you the prospect for outsized increases in profitability per ounce relative to where the gold price. So if the gold price goes up 100%, presumably if costs are stable for a producer, they should see profits go up 200%. So that's the leverage proposition that equities offer. Of course, when you're owning a gold equity, a producer, they're not immune from inflation that we're experiencing in the general economy. So that leverage proposition doesn't necessarily always translate as efficiently as you might hope. And that's why, I've been building and operating mines for 35 years. When I got back into the gold space about 5 years ago, I ended up founding a royalty company because that does provide unmitigated leverage of the gold price. And there's a number of royalty players out there that you can buy because they offer you top line exposure at the mine site. You get a percentage of the revenue from a mine, but you're completely insulated from costs at the mine site because you're getting a percentage of the gross. That's the beauty of the royalty business. It also gives you leverage to the exploration being undertaken by the operators that own the mine without actually having to contribute to their exploration budget. So it's the purest leverage play on gold that you have. And that's why, again, I founded a royalty company. I was concerned about inflation, and that did rear its ugly head. I didn't anticipate that COVID would cause it, and nobody predicted COVID, but that was definitely the match that lit the dry wood in the forest, and it caused significant inflation that unfortunately mining companies are experiencing along with the rest of us in our day-to-day lives. So I would say if you're looking for leverage, I'd buy a royalty player over a producer.
I guess if you had that crystal ball, where would you say gold's going? Obviously, I'm going to assume over the long term higher. But in the short term, would you anticipate a bit of a pullback here? I know obviously it's tough to say, but it's come so far so fast, and I think we're all a little bit spoiled and thinking that this run will continue. At some point, I would imagine things in the U.S. will stabilize with respect to trade, tariffs, maybe even debt come down based on paying off some of that debt as the president wants to do. Do you think gold in the short term will continue this crazy run that it's been on, this amazing run, or do you think we could see a bit of a pullback in the short term?
Yeah, nothing goes up in a straight line. And as you correctly pointed out earlier on, Alan, we have seen a lot of volatility in the gold price over a 50-year horizon, but the direction has been unrelentingly upwards because the direction and purchasing power of our underlying currencies has been unrelentingly downward. And that's not going to change. That longer term dynamic is irrefutable and irreversible, given the amount of debt that we have to deal with at the government, corporate, and personal level is just going to have to be inflated away. So gold will continue to go up, but with some volatility in the interim period. That's unavoidable. That's just the nature of a very liquid commodity like gold. A lot of buyers and sellers in the market and it always leads to short-term volatility in any commodity that's as liquid as gold is.
Yeah, no, for sure. And we've seen a lot of volatility over the last couple of days. It's amazing to see gold move as much as it has, and I know a lot of investors are excited about it. So, David Garofalo, Chairman and CEO of Gold Royalty Corp, thank you so much for being with us once again and talking to us about this precious yellow metal that everybody is talking a lot about over the last few days. And we'll see. Maybe next time we talk, gold is a lot higher from here. So, thanks again for joining us. Much appreciated.
Thanks for having me on, Alan.
All right.